I'm trying to be there for the times where I see these patterns happening the most. So I'm there, I'm watching, I don't have to trade. I have like the retired trader mindset where you're there, you're watching, but you don't want to trade and you want to come out of retirement only if there is a trade that's so good that you would feel guilty missing.
Sitting down today with Andrea, who's one of the students of Tim Sykes, who we interviewed a few episodes back. So good to have you here, Andrea. Looking forward to talking about your
Etienne.
trading.
Thank you for having me. Thank you. Great to be here. Great to talk to you.
Of course. So Tim wanted me to kind of have a talk with you because I've seen your spreadsheets. You are very detailed on how you trade and your analysis and your data. So you went from 5,000 to
that's correct.
145,000. Is that right?
Yeah, that's correct.
Pretty cool. So tell me a bit more about kind of what you trade and what you do these days.
Right. So I follow the Timothy Sykes teaching. I'm a challenge student, so that's where I come from. I'm also a scientist, right? So I do. I'm a part-time trader, full-time scientist, and I started with like $5,000 in 2019. I was watching a few DVDs, a few video lessons from Tim. I had a very limited understanding of. I understood a few things, a few patterns, right? And but I wasn't fully prepared at that time. So when the market turned hot, you had the crazy years of 2020, 2021. Everything was spiking. You had supernova after supernova after supernova, and you had all these OTC stocks spiking. I was basically trying to dip buying them, right? I was dip buying them, but I had no strategy, I had no process, I was just, and by the end, by like January, February 2021, I had turned these 5,000 into like approximately $30,000. And then what happened in February, March, everything died, OTC stocks died, everything cooled off. And I was like, then at that point I realized, okay, if I really want to succeed in this game, I need to have a process, I need to have a reliable strategy, I need to have a good understanding, not just of OTC stocks, but of everything, right? So that, because the market is constantly evolving, it's like a cycle, and so you have to be prepared if a pattern goes out of fashion. Maybe there's another pattern. You constantly evolve. Patterns change too. So I joined the challenge in 2022, and that's the time where I really decreased all my sizes, position sizes. I went into testing, as you said at the beginning, right? So I was testing. I was studying everything, and then I had all these patterns. I was testing what patterns I was, maybe good at. I was building all these statistics. This is some of the statistics that we had, like holding hot penny stocks overnight over the weekend was the pattern that I hated the most in the beginning, right? Because I was deep buying all these panics, and in 2022, 2023. While I was studying, I was like amazed that this was my best performing pattern. So like the pattern that I hated the most turned out to be the pattern that I was best at. So then if we go back, if we look at this chart again, my profit chart here on Profitly, that's Timothy Sykes' website, like at the end of 2023, when the market turned hot again, then I was ready to capitalize. My statistics, my analysis basically made me confident on what patterns to size up, right? And another thing was 2022, 2023, as I said, the markets were slow, so it was key to use the slow time, right, to truly learn and refine the background, refine the process, develop the process. So that's sort of where I come from. As you said at the beginning, I'm like 140,000 in profits now. So, but that came down to really knowing the patterns inside out, adapting to the market, and also really knowing what I was good at, right? Because And the Timothy Sykes Challenge was very good in terms of mentorship, in terms of building knowledge, and also not only knowledge, but experience as well.
Right. It's interesting how much data you kept track of too. You have a big spreadsheet with like a lot of data you track.
It's huge.
And I think for someone like you who is a scientist, like you work in that field, it's good to have data because it builds your confidence and you kind of get a better understanding of how things work too.
Absolutely, absolutely. So here, for example, you see this one is a figure, like it's a graph where I'm plotting the total dollar gain per day, right? And then you have Monday, Tuesday, Wednesday, Thursday, Friday, so the different days of the week. And you see, for example, there is a big spike on Monday and Friday, because that's me buying a stock on Friday and then selling it, holding it over the weekend and then selling it on Monday. And sometimes you don't even have to sell it on Monday, because like if a stock spikes too much on a Friday, then because you always go in with a plan, right? You always have a plan. You don't make these things up. And like if I say in my plan that my goal is to make maybe 15-20%, and the stock is at 23% on a Friday, then there's no need to to sell it on Monday, right? Yeah. And so that's me taking like profits here. And then also here you see, for example, the total dollar gains per month. So here you have the dollar amount and loss too. And here you see the gains in green, losses in red over the different months. And you see like this is a phenomenon that Timothy Sykes talks about all the time, the holiday trading. So the market... Yeah. There's lots of runners, November, December, January, right? And so you see this in this figure, right? I have many gains, like here, December is my best month, right? And then you have November a little bit. You also have January, February. Then things starts to cool down. But what's cool also is my biggest losses are in January, February, and also over the summer. Why is that, for example? Because I have, when you go in big, you size up for the holiday trading in December, January, then sometimes you have troubles sizing down when the market cools off. So I have to be more careful here. So this is what this figure is telling me. And then also July here, that's the summer, because the summer is slow, so you have to adapt, you have to size down, tune down your expectations. And so that's also what this figure is telling. But the cool thing is that during the challenge, we talked about the mentorship, the value of that. And everybody was super helpful, but nobody told me when to size up. Because they were telling me, you're going to realize that when you're confident. How do you build up your confidence? Data. So this is where the spreadsheet, basically, this giant spreadsheet, is useful, as you said, right?
When you go and actually trade, then you're going to have to flip your mindset into, because you told me as scientist, mindset is good for tracking and data, but when you actually place trades, it doesn't work too well, that kind of mindset.
Right, absolutely. And so this is why, so here you see, for example, in this giant spreadsheet, we have my percentage of being right. Of course, the pattern we're trading, the ticker, well, this is just the usual things, right? Entry, exit, position size, and all that. But then the key thing is that we have the trade description, so my strategy, my plan, what happened, the emotions I felt during the trade. So this is why my scientific background is good for tracking data, but then trading is not an exact science, right? The market is always evolving, so you have to adapt. So here I track of my emotions, but then I also track the lessons learned, right? For example, I sell a stock for a profit. Did the stock continue to spike? So should have my profit target been higher, right? Or I ended up for a loss. Did I cut it rightly, or maybe the stock spiked back up because the market's choppy? So so I use my previous trade as a guide for my next one. And then I have the intraday and daily charts here. I take screenshots and I analyze that. And but I don't take the screenshot, you can see here, for example, immediately after I exit the trade, right? I give it time to see what I could have done and how I can adapt to the next trade. So this is like the science in me, but then of course you see also the emotion tracking so that I can, track of the emotions, and this is where I have to study and refine the process.
What's cool is in your day job you study Volcano. So tell me a bit more about kind of what you do, and you also apply this to trading. The same lessons you look at in Volcano, you can apply to trading.
Right.
Tell me how it works out. I want to hear that.
Right. So I was born in Italy. I studied physics. Then I moved on to the United Kingdom. I studied volcanology, so the study of volcanoes, at the University of Lancaster in the northwestern part of England. And then from there I moved to Hawaii, in Honolulu. I obtained a doctorate degree in geophysics, so I studied volcanoes. And my background in physics and the study of volcanoes, it's very cool, it's very interesting. Basically, we use remote sensing technologies to look at gases, the formation of the edifice, and also earthquakes to try to infer on the trigger mechanisms of volcanic eruption. So when a volcano is going to blow up, like when magma rises in the conduit, you have earthquakes because obviously rocks are being, stressed as the magma finds its way in the edifice as it rises. So earthquakes. Then you have gases that exhaust from the silicate melt at different depth. So as you measure gases at the surface, that can tell you at what depth the magma is, because different gases exhaust at different depth, right? And then you have, as the magma moves into the edifice, the whole volcano inflates or deflates. So all these indicators basically tells you what happens at depth, right? And it's similar to this. It's similar to investing and trading, because basically what happens is that you have different indicators here too. You have the catalyst, right? That's something I always look at. What's the catalyst behind the move? But also, you don't only look at the catalyst, right? Because a stock may report amazing earnings, but then maybe the stock doesn't move. So you care about, as Tim always says, you care about the reaction to the news. So price action, you want to see that. So that's two indicators. So then you want to know the state of the market, right? The time of the day. At what time is the pattern happening? And but also your schedule. I talked about my full-time job. So am I free to trade? Maybe not. So you have to, so that's foreign. I mean, there's many indicators that you need to really take into consideration when going into this. What's the volume? The time of the day, the time of the year. There's many things, right? Like volcanoes, so.
How do you manage trading with your full-time job? Is that difficult to manage, or do you kind of build a schedule around it and just go with it?
It's crazy, right? It's crazy because I live in Hawaii, right? So the market opens in the winter, that's like 4:30 a.m. In the summer, it's 3:30 a.m. So, and then it closes either at 10 a.m. or 11 a.m. So I sort of manage that, because at night maybe I make some trades, then I go to work during the day. Okay. So somehow being in Hawaii helps. Of course, there's very little sleep, so that's why you said it's crazy. But then if you ultimately it all comes down to time management, right? You have to be organized. And for example, maybe if I'm long a stock overnight, then I wake up, I sell, then I go back to sleep for a few more hours, and then I go to bed early, right? And then you go to bed early. So that's basically, you got to adapt. And then sometimes when the market is low, maybe I sleep all the way until 10 a.m. I don't even check the market. So it depends, right? But if you are organized, with your plans, you make plans, and it's good.
Tell me a bit more about the goals that you have. Do you want to go trading full-time eventually, or do you still want to keep your day job, or how do you see this in the future?
Well, I see it as a maybe multitasking thing, because there's many people affected by volcanic eruption, so it's important to continue to do that. but also at the same time, this one, investing and being able to basically manage money is also important. So I see it as going side by side, right? So, right. And again, it all comes down to managing time. You know, it's okay if you miss trade, right? If you're traveling, if you have like a meeting, you know, you don't have to be trading all the time. You don't have to be looking at the market all the time. However, like if you see a pattern happening, maybe, you know, at a certain time of the day, like for example, a few weeks ago actually, we had the MTPLF, which is an OTC stock here. You can see it had some amazing panic dip buys, right? And we haven't seen OTC panic dip buys in a while, but this one was up like, it was up from the 2s all the way to the 16s. It was crazy because they're buying Bitcoin. This is a Japanese company, so it's hot. And I saw in the morning, I saw on May 21st here, it had a big intraday panic dip buy. So I just watched it, I didn't trade it, but then the next day it had an even bigger panic dip buy, and because I watched it the previous day, even if I didn't trade it, I said, okay, let me see if it happens again, right? Because patterns repeat. And then, of course, it had a third panic dip buy on the 23rd, and then the stock like uptrended a little bit, moved sideways, and then it didn't have. So it disappeared again, the pattern, right? But if you have the knowledge and the experience, right, then you can be prepared. And that's what I was telling Tim yesterday. We did a webinar together. He was kind enough to, you know, have me on his webinar, right, to share some of the things that I've been learning thanks to him and his team. And like we were talking about the difference between being ready and being prepared, right? If you're ready, you know the time. It's like you meet a friend and say, oh, let's go to this restaurant at 8 p.m., right? You know the time, you know the location where you're going to meet your friend. So you're ready. But being prepared means having the knowledge to size in opportunities whenever there are, whenever there are. Like for me, it has been working fine because I was, this is before going to work, right? I could make a few trades, but maybe somebody who is in Los Angeles, for example, maybe for them buying in the afternoon and selling the next day isn't very good because they have to be at work, right? That happens in LA. What is that? The market closes at 1 p.m., right? So maybe they have meetings, they have other things to do. So maybe for them it would be better to look at pre-market because that's like the market opens at 6:30, right? So they can wake up early and maybe sort of what I'm doing, right? So they can. And right now the pre-market is crazy because you have all this. You hear, if you follow Tim Sykes on social media, you hear him saying all the time that pre-market is hot right now because you have all these pre-market runners. So yesterday, for example, I did bought this one, EVGN is a stock. They reported, it was a press winner. They had a good press release and the stock spiked pre-market like crazy, was up like more than 100%. And then the market's choppy, so you really can't buy breakouts right now. So I did bought it right here in the 230s. I sold it in the 270s. So I made like 15%. And today again, I made like $500 on EVGN. This is all verified on Profitly. And then this morning, look at this, HSDT. Here at 7 a.m., they had a press release, like they got a deal with some major payment provider, healthcare provider. And look at this, the stock spiked, it was up like 150%. It got all the way to the 215s. And then you can't really see this. I got to zoom in a little bit. Here, the stock panicked. It was down a little bit. It was down like 15% from its highs, and it cracked this key level 2, right? So I dip bought the panic here in the 180s, 190s. I was dip buying it here, and then I sold it, and then I gave it a little time. It formed a double bottom, and then I sold it here at 209, 210. So I made like 10%. Right. So this is like, it's crazy, but the market's been choppy throughout the day. Like you have yesterday, Tim and I were talking about failed breakouts. You have all these breakouts, it spiked a little bit and then it tanks. Mm-hmm. So it's crazy. But pre-market is hotter. So you have this, but like these patterns may disappear again, but it comes down to adaptation, right? So in 2020, 2021, we talked about when I was doing these OTC panic dip buys, they disappeared. But now you have these panic dip buys on listed stock pre-market. So you see the pattern is sort of the same, but it's changed. You have to constantly learn, constantly adapt. And so you see now, as we're speaking, the stock is choppy, got down to the 150s, 160. It bounced a little bit to the 1.8s, but like, I don't know, I wouldn't be long this now because it's like moving sideways and you never know what's going to happen. Maybe this is just one pop and then it's done. Who knows? Or maybe like as the market opens, we'll have another quick spike. We'll see what happens. But
when you look at a stock like this, what are the indications that you want to buy on the pullback? Is it based on price action only or something else? No,
as we talked about before, and as Tim says all the time, it's multiple indicators, right? So here, for example, I like the catalyst. It was a press winner. The stock won press because the press release is associated. See, here it is. So the company basically announces that it got authorized for payment by a major healthcare payer. So it's a nice press release, and more importantly than the press release, the stock spiked 100%, 150% on the press release. So it's not only the PR, but also the stock moved on the PR. So you have the reaction to the news. And then, it's up so much, you have shorts getting squeezed because they had no idea. You have people like who are watching this and is like, oh, this is interesting, but it's up so much. I want to get a pullback to get in. So this comes down to knowing the patterns inside out. So you have multiple people looking for. You have like maybe shorts who are trying to short here and then they cover. So then you have the dip buyers. So you have multiple groups of people trying to buy, and so this is, but ultimately you never know what's going to happen, right? Yeah. So based on the past, I watched EVGN yesterday. It did the same thing, but look at this. Like you had the big pre-market spike, and then it downtrended all day, did nothing all day. Yeah. So that's what I'm talking about. You need to adapt, and now pre-market is hot. HSDT did exactly the same thing today, and so you adapt. But then if you're wrong, Tim says it all the time, it's rule number one, you cut losses quickly. Mm-hmm. So this is also where my scientific approach, right, it comes down to. You go in with a plan, you have a profit target, you have a stop loss basically, you don't want to lose more than that. And then you may be wrong, the market is always right. So you go in with a plan, you buy, you see what happens, right? But then the market ultimately, this might have not bounced. In that case, I would have cut losses quickly, and then I would have adapted for the next trade, right? So this is how you basically adapt. This is how you go in with a plan, and this is how the market is always right, and you adapt to what the market tells you to do.
When would you get out if price didn't bounce? If price just went straight back down from there?
I would have cut 100%.
Do you have a level where you would get out at, or is it based on kind of seeing the market evolve?
No, right. This comes down to another one of my trades, IMAB. This one is a stock. They have an upcoming catalyst on June 17. They're gonna be on a show. Basically, they're gonna join at this conference. They're gonna talk about it. and I bought it here on this big first green day in the afternoon into the close because I said the news is going to spread, right? And I bought it at 180, in the 180s here into the close. And then my previous trade was RRGB, was an earnings winner. This earnings winner closed strongly, and then it panicked at the open. I cut it because I said, oh, okay, it didn't gap up the next day. Maybe the news isn't so good. Maybe, you know, something's wrong with the stock. It panicked a little bit. I lost like a few $100. And then the stock spiked back up. Okay. And if you look at here, let's see the chart real quick. Look at what happened. So this was the first green day. I was long here. Then the stock dipped. I got chopped out. And look at this. 2, 3, 4. It kept spiking for 4 days. It was crazy. So I took notes about this. And then this brings us to the next trade, which is IMAB. I was long here in the 180s, and the stock gapped down to the 171. So I was down like 10% pre-market. Mm-hmm. And I said, do I cut it? No, because of my previous trade. And so I said, okay, let's see, I'm going to give it time. Let's see what happens. Now, this is where the emotional trading comes in. Right. I was not happy, I was not at ease, let's say, right? Because I was down 10%, but I said, the previous stock kept going for 4 days. So let's see what happens. And then I was down 10%, and then at the open, right before the market opened, I saw on level 2 big bidders. I thought, okay, this is good. It may be going in the right direction. Let's see. And then the stock spiked at the open. It got all the way to the 180s. And here I was like, I had to really manage my emotions, right? Because I was like, okay, I'm gonna wait, I'm gonna give it time. But then at 190s, I was up like 5%. And I said, okay, I've had enough, I'm gonna take it. And that was a mistake because actually on that day, the stock spiked to the 2s, so I could have made 10%. And then look at this. The next day, it was up to the 260, and ultimately, after 1, 2, 3, 4, 5 days, it got up to the 310s. So I should have given even more time. And so this is how then I took notes about this, and then I basically, adapted to the next one.
How do you avoid, because it's good to learn from past trades, but how do you avoid changing the strategy always from each trade to trade? You want to maybe look at a bigger perspective, bigger sample size to change your strategy?
Right, and this comes down to my spreadsheet here in the beginning. You have a month where maybe I'm better, month where I'm... So this is how, based also on the time of the year, on the performance, on the past history, on the market current status, I adapt, and maybe, maybe I take a bigger size, maybe I take a smaller size. On the trade I just made on HSDT today, I was planning on using a little bit more size. Yesterday I used like $5,000 because these pre-market runners, they're crazy, right? So they spike 100%, they tank, and there's no guarantee they're gonna bounce. So you play the odds. So I was going, a little bit bigger of a position, but then I got only a partial execution. So I took what the market gave me, okay. And so I adapt. But it all comes down to knowing the patterns, right? And then adapting to the market and constantly learning from what's happening, right? What's happening. But you see, if we go back to here, all these trades are verified on Profitly, and basically what really, I still remember it. I was talking to Tim. It was the summer of 2023. Here, I was crossing 40,000 in profits, and it was IQST. That stock, I was like, okay, I studied them. I knew my statistics. I knew the data. Let's try to. So during this time when I was studying, I was using very, very small size, right? Yeah. That's why you see this plateau. But I remember this trade, IQST, because that's the first one. I said, well, based on the data, based on my analysis, based on... I should go bigger. Let's try. So I used the position size of $5,000. And I made like 5%. I made $500, and this trade on IQST on that summer really changed everything, because this is the time when I felt confidence based on the knowledge built through the challenge, based on the experience, based on the statistics. That basically I said, okay, maybe I'm ready to try to go bigger. And then and then I was going bigger, and then when 2024, you had like many stocks were spiking and everything, and even the beginning of the end of 2024 into 2025, you had quantum stocks were hot, right? And so I was going in with $20,000, $30,000 size.
Okay.
So.
Now, how do you manage your size currently? Do you have a specific kind of multiplier where you kind of increase your size by this amount, or you reduce by this amount, or how do you kind of structure it?
No, right. My goal is to try and make a few thousand, a few thousand per trade. Mm-hmm. So like now it's the summer as we're speaking. The market's choppy, summer slow, because obviously many go on. There is a saying that says sell in May and go away. Yeah. So this is what we're seeing. So I'm trying to reduce a little bit my position sizes. I'm trying to enjoy, being outside, and but I'm trying to be there for the times where I see these patterns happening the most. So I'm there. I'm watching. I don't have to trade. I have as Tim always says, a retired trader mindset where you're there, you're watching, but you don't want to trade, and you want to come out of retirement only if there is a trade that's so good that you would feel guilty missing, right? So this is how I do it. This is how I try to manage my emotions, sort of the mindset, and this is what Tim says, in his lessons, in his, teachings and everything.
Tell me what the next steps are for you. Like, what you're trying to improve or what you're trying to work on currently.
Well, I'm trying to always, be there for the market to see what opportunities are there, and I'm trying to refine the process, right? I look at the data and I see what I could have done better, right? The example we talked about before, IMAB, I could have had a big loss. I could have had 10% loss had I taken it pre-market. But I gave it time because of the history, because of my previous trade. RRGB, I had a loss. IMAB could have been a loss had I been undisciplined, but it was a small win. Could have been a bigger win. So that's how I have to learn, right? I have to learn on the patience. Right? Being patient, maybe, but at the same time, it's tough right now because the market in the summer, it's slow, it's choppy. So at the same time, my expectations are low. Like, for example, I was long. So look at this, MTPLF, the stock we talked about before, has this crazy gaps up and gaps down. But usually on the first green day, if it has news, look at this. This was a 15% gap up. And here it did it again, right? So I said, okay, here you see the breakout, you see the big volume, the stock had news. And I said, it did it in the past, let's give it a chance. Right. So I was long this stock on June the 6th. And then the next day, it actually gapped down a little bit. So I said, okay, this is an OTC. I'm going to get out. It didn't gap up for some reasons. Maybe it's the market. Maybe it's slow. Maybe. But then, look at this. The stock actually, so 7 minutes, I still remember this. I was talking to Tim about it the other day. 7 minutes after I got out, the stock began to slowly uptrend, and then it spiked to the 12. So I lost like a few $100. I could have made 500, 600, something like so. Not too much, but small gains add up over time. And again, this is what's happening right now. It's choppy. This is an example of the choppiness of the market right now, for example, because you see, you have this big first green day. In the past, it had these gap ups, but now it gaps down, I got out for a small loss, and then it spiked. So that's what's been happening. Like, and that's why it's also key in some of these breakouts that we have seen. Like, it's crazy if you buy the breakout. It's very tough because you have these fake outs. It's very choppy. So dip buying has been working for me, at least. For Tim as well. Many of his students. And these dip buyings have been working, so that's what I've been focusing on. But the knowledge I developed, so I'm not a short seller, for example, right? But I know the inside out, the dynamics of the going short on a stock, right? So short selling has been crazy right now because, in my opinion, very dangerous, right? Because you have these crazy short squeezes like HSDT today, and then KLTO yesterday, where the stock was up 18 times in 2 days. So it's very difficult, scary for me going short, but I know the strategy to go short, right? So if, for example, in the future, maybe going long isn't working well like this anymore, like I would be willing to try and go short. Right. So this is how you adapt, but this is like, to go long, right? To go long, you need to know the opposite, right? You want to know what the opponents are doing, right?
What they feel like too,
Right. So you sort of, try to play the odds, and then you see, what's happening, and then you adapt. So, and that's the thing, right? Never rely on memorizing patterns, because the patterns, markets are dynamic, constantly evolving. You have to know the nuances of each pattern so that you can basically adapt. Adaptability as a trader, as an investor, I think it's your greatest asset.
Tell me where people can find you or connect with you after this podcast. If they want to reach out to you or see what you're doing and learn from you.
Yeah, I mean, I'm on Twitter. Like my username is Andrea. That's my name, Andrea, and then there is a C. Because that's my middle name, C, and then my last name, Gabrieli, so Gabrieli. So that's my Twitter account. I'm on Instagram as well, even if I don't post very much. Tim says I should post more. But anyway, just to wrap it up, right? Cut losses quickly, know your patterns, know your strategy, know your statistics, right? Know which patterns you're best at. Now, when I was still learning, I thought dip buying was my, I loved it. I knew the pattern, and then, but then holding overnight, kind of more swing trading, right, became my best performing pattern. So I had no idea. That was mind blowing. Trading is very counterintuitive, and also as a scientist. It's good to analyze data, right? Because you want to know what strategies you're best at. Maybe you're best going long, maybe going short, right? Maybe you love short selling, even if in this market it's crazy, I think. But perfectionism is the enemy of profitability, right? Yeah. And that's something I struggle with when you were asking, right? What's I want to improve, being patient, but also perfectionism, like, because you striving for a perfect entry, right, is not good, because the market, you have to adapt to what's working. So going back to MTPLF, I was here on this day, May 22nd. I actually wanted a panic below 10, right? And I remember it. I wanted it below 10, but the stock bottomed at 10. It had like a big panic, intraday panic. It bottomed at 10. And then I said, okay, what do I do? Do I use my scientific background and I wait, or I adapt? So I said, okay, I'm going to buy the 10 with a smaller position than the one I was planning on using.
Right.
So that's what I did, and the stock bounced, so I profited. So that's the key. You have to be meticulous with your entries and exit, but striving for perfectionism is not good. So these are the lessons, right? You cut losses quickly, you make a plan, always go in with a plan, you stick to the plan, you follow it, you manage your emotions, you adapt to the market based on what you could have done, right? And then never memorize patterns. And perfectionism is the enemy of profitability.
I like that. These are good lessons for sure. Yeah, people can definitely take notes, apply them, reach out to you if they want to, connect with you, and they will see what you're doing and learn from you.
Sure. Thank you very much for having me.
Pleasure.
Thank you, everyone. Bye.